Good evening, all. What a day, right? I'm Ira Epstein with your SPDR ETF wrap-up for this Thursday, October 14th, 2021, 6:45 p.m. Central Time. Whoa! Big moves in the stock market today. Look at this in the SPY, up 7.32. I mean, even stocks came alive, the semiconductors. The market is realizing that this power crunch that we're hearing about is impacting everything. In Europe, a zinc smelter, a large one, closed. They can't get the power they need. I predict that countries are going to throw out the Bitcoin miners. Wherever they go, they consume a lot of electricity. Does that really benefit things that maybe the public at large needs versus these miners? I understand that the U.S. is now the lead place for these miners. Get rid of them. Now, that doesn't mean that they'll fall in price on Bitcoin. The less mining probably makes it go up again. But in a power crunch time, when we're hearing now Indiana, their heating bill's going to be up 40% from last year. Indiana. Illinois, I got a letter that expects at least a 30% increase in my natural gas bill. All right, that's natural gas. Electricity runs off of a lot of, how do you make it? You're using these things. I really don't need Bitcoin miners around me. I'd rather have other. Is that a negative, and will I get people complaining? Sure, I will. I don't care. I want things that are good for all of us. We have to be able to afford our heat rather than worry about that Bitcoin investment. So, as we take a look at the market, I thought the market actually would pause a little bit right here. Forget it. These markets have now made a dramatic return. Take a look at this, to the upside, with the whole market coming alive. Did anything materially change since the beginning of October? We're only at the 14th when we were at 280 and we're back to 302. Well, I don't think so. When we take a look at the chart, is it a trend? It is not. It's certainly going up. We see that. But if you define as a chartist what is a trend, it's more than just a trajectory to the upside. A trend will normally have higher highs and higher lows and be over key numbers. You have, in this particular case, the way that I teach swing lines, which defines trend, a lower low and a higher high. Doesn't mean you can't go up. It just means it's not a clean trend. Where's the battle been? Did we not talk through yesterday? Because I've had this as my lead chart for a while. I'm going to get rid of it very shortly now. That here's the market. It's fighting a battle for direction. Which way is it going to go? And you didn't have a trend. You had a bias up. The market coming up. Now, this is Wednesday. This is what it finally did today. As we move on with the charts, let me come to this one right here. Bollinger Band. Where do you think I think the resistance is going to be? 95% of the time you stay within the band. You hold it that other 5%. I'd like you to take it, if I'm long, from me at that number. That's the key. What about momentum? Overbought. I think you're getting to the point in a number of markets will not surprise me. Let me repeat that slowly. Not surprise me if you see profit taking set in by the end of the day tomorrow. That doesn't mean you fall much, but I think the pros are realizing this is a big rally, profit taking. Is it really going to go with all the headwinds we're facing? And they might back off a bit in some of these markets as a group. Apple came back and it's caught right here at the 100-day average in the 18. Didn't join the parade like everything else. It is a 2% gain. It has come off the 139 level, and it's back up here at the 143 zone. If it gets a pop, let's assume tomorrow it decides, I should catch up with all that, up to 147. What would happen? Well, people might go, remember this thinking. You're looking at the earnings, and other people might say, I got to go out and buy that Apple phone. They're going to make 10 million less of them right now. It could be more than that. Well, all of a sudden, the psychology is everybody's buying an Apple phone. I should have it. I know it doesn't impact their bottom line. They're making X amount of phones, going to take the income in from the units that they have. It's just how market psychology goes. When you look at ARK, okay, I said Kathy Woods looked better once you crossed this number. And this is the first time I want to show this. You have been under this. She's been under water since September, right? Yesterday's the first time the market closed over the 18-day average in an uptrend. Why is it an uptrend? You have higher lows, higher highs, and momentum is pointing up. Until you come back and you take out 109.76, I'm looking for the potential up here as a chartist. That's how the market seems to be headed. XLI, if you were sitting next to me, let's assume we're sitting like this next to each other, and you're asking me, hey, what should I do in that? I'd hit the arm and you get that elbow right in there. What are you saying? It's your first challenge of the upper Bollinger Band. You're overbought. Why are you asking me these questions? That's what I'd be telling you. Between there and the 100-day average, I'm looking for resistance. No, I'm not bearish. There's the element of where I'm looking for the resistance. In the semiconductors, I have been a fan of semiconductors since I started covering them this year with you, with putting on so many more of them. Why? Whenever I read that there's a 2-year shortage of something that has to go into everything that's electronic, our automobiles, our coffee makers, our telephones, I can go on and on. How could I want to be bearish? There's a 2-year log. These companies can't help but make money. And they have pricing power. Eventually, I expect them to catch on. We'll see if I'm wrong on that. I could be. On cannabis, okay, so the market had a rally, but it's got an embedded number. Now, I'm not friendly. Until this comes down here, that's it. Now, why these pot smokers, if they're trading, aren't smoking more and getting this up there because the market's back on a tear to the upside? Come on, guys, light up. When you're looking at XHB, you have higher lows, higher highs. First resistance, 100-day average. Trend up, bias up, not overbought. No reason that 75.96 doesn't remain the target. To break the pattern, you'd have to get under 72.14. The energy. Who wants to be short energy? Now, there's going to be a day when we all come in and wham, the bottom's going to fall out of it because everybody goes for the door at the same time. You get those flash breaks in the market. That's why as the markets go higher and higher, you're not buying in larger quantity. You're narrowing down your buying. You ever see the pyramid? You buy a base and then you're buying less and less. So as the market pulls back, it's not inverted where you're buying a little and you're buying this way. And when the crash happens or the correction, whatever you want to call it, you're getting annihilated. Pros are still looking for this up move until the red line closes under 80. I think they'll keep buying. Emerging markets, I think this is where they get in trouble right now. You're at the upper Bollinger Band, a lot of resistance. They've come alive. It's been a nice rally. The fundamentals just don't look to me there right, but I'm a chartist. Still bullish, but I expect profit taking. Now we get to the gold boys. This is where I expect the pros to do what they do best. This is where I think they step out a little bit. Why? You're over the upper Bollinger Band. You only stay over it 5% of the time. You're now up to the 200 and the 100-day average. That's an awful lot of resistance. I'm looking for the pros to take money off the table. Gold miners, they can reach up a little bit more, but you now have 2 days in a row over the upper Bollinger Band. It's rare to go beyond 5. Go count. You will see what I'm saying. You're overbought. If they get up there, I think the pros are waiting, but I think the pros are maybe pulling back a little on positions already. TLT. Well, what broke interest rates might be the fact that when this market rallied, and do you recall we were talking here, here's your embedded reading, and I'm looking at the market. Remember, we had a series of reports that go, why aren't we increasing? In other words, yields going up, not down. And then we're getting like this. This was yesterday, and I said, it's probably going to that 18-day average of closes. Bingo. Now you're in the resistance area. The interesting thing is the markets are doing so well, and you're not at 175 on the 10-year note. You're back in the 1.5. So the Fed's got an interesting, not dilemma, an interesting events in front of them. They're seeing the market do a lot of their job, and the market is saying, we're pretty comfortable, 1.3, that area. to 1.7 on the 10-year, back and forth, and that seems to be what this is. That's a 20-year, so it's a little longer duration. In FXE, now this is the euro. What do you do when you lose an embedded reading? Follow me. I said it looks like it could be lost here, and the dollar's already correcting. Bingo, I'm looking for the 18-day average. When we get it, we'll find out. Hasn't hit it yet. Wouldn't surprise me if it gets up to that 108.34. I think the shorts ran for the hills today. And, you know, that's what makes this all fun. I try every day to give you technical analysis, news, what to do, and I want to be your wake-up guy. I want you to wake up in the morning and say, I want to look at somebody that I respect. If you don't do this. In chart knowledge. I want to see what's going on in the futures first, because when my ETFs and everything opens at 8:30, what does that do? So I cover all these markets for you, and then afterwards, I match it up with all the ETFs plus additional stocks and so on. You're getting me covering an awful lot of data. It's in your hand, and then you take it from there. What do you want to do with it? So that's what this is all about. And putting that together for me is a ball. For you, it's fun, because you don't see me at that hour. I don't want you to throw up. I want you to be very comfortable not looking at this face. So I don't appear. I have my screen up, and I'm walking you through all these charts, but I'm quite serious about the trading. Here I'm having a ball. This is not my personality in the morning. The morning, it's money at risk. I know a lot of people are following that, using it in their philosophy of trading, their analysis. How do you get it? Simple. Go to our website. Under the word research, it's all there. It's all explained for you. I'm Ira. You have a good day.